Hi, welcome everyone. Can you guys hear us and see us well? I hope so. I hope you are able to see my slide as well. If you aren't able to hear us well, hi, welcome everyone. Can you guys hear us and see us well? Sorry guys, I'm having a bit of a lag of feedback. Maddie and Danny, can you guys hear me well?
Yeah,
Yeah,
yeah, I hear you
I
fine.
can hear you okay. I
Okay,
think the
okay,
YouTube
that's
live is just slightly slower, that's all.
okay. Let me Okay, I realized what happened. I was turning on my YouTube on, so sorry about that. Well, welcome everyone. My name is Lin Seng. I'm the client experience lead at Endowus, and today we have Maddie and Danny, two of my colleagues who were joining us, and we'll hear from them in a bit when we get to some self-introduction. But first and foremost, welcome again to Getting Personal with Endowus Advisors. Some of you might have connected with us via email or through a scheduled call. We appreciate you reaching out to us, and we know that this is just at the beginning of hopefully a lifelong relationship with Endowus as well as with us. Um, so in the next 1 hour or so, it's just going to be a candid session of us introducing ourselves, not just as employees of Endowus, but also as and Endowus investors as well, right? We ourselves have invested via Endowus's products and solutions, as well as us as people, right? So you get to see the face behind the technology. So let's get started. For those of you who are not too familiar with Endowus, let me just do a brief introduction. The mission of Endowus is basically as a wealth tech platform. We desire to help people invest better so that they can live easier today and live better tomorrow and through retirement. And this vision and mission has stayed true from the very first day that the firm was founded by Gregory Van and Sun Yuning, and that has cascaded through till today, where recently you might have heard news where we have raised Series A with two very noted venture capitalists, right? So the mission and vision has held true, right? We help people invest better so they can live easier today and live better tomorrow and through retirement. And you might have seen us in the news, right, through Business Times, and through perhaps you have seen us when you are taking MRT. I believe one of the adverts was at the Raffles Place MRT, if I'm not wrong, right? So, or perhaps you have attended some of the webinars. The one webinar, not one seminar that you have seen at the top is the last seminar, the physical seminar we had at SGX before COVID happened, right? With that, these are our partners, and I won't be able to point. Details can be found on our website. You see our two founders, Greg and Yuning, and then the investment office led by Sam, and the client team led by Sinting, our boss. Technology, Drew, and product would be a Jinshi or JX as we call him, right? So quick summary, who is Endowus? Endowus is the first and only digital advisor for CPF, SRS, and cash savings, helping all of us, including the employees, to invest holistically, conveniently, with expert advice at the lowest cost possible. So if there's one thing you need to take away today is you have an opportunity to sign up and get some special access fee discount if you come to our booth. There is a opportunity to leave your email, and by that you will have access to some really special deals when you open an account with Endowus if you already haven't opened an account, right? So do that. Drop us an email. We would love to stay in touch with you. With that out of the way, we are going to do a couple of introductions on those who are on the call with me, right? Myself, Maddie, and Danny. So maybe we could start with, okay, whoever wants to go first. Want to do a self introduction, or should I do a self
Sure.
introduction?
Maybe you should
What do
start
you
first,
think?
Lindsay. Maybe you
Okay,
should start first. Yeah.
okay. My name is Lin Seng, and the climate experience lead. prior to Endowus, I'll share about what I did before, right? So prior to Endowus, I was actually working for a church, but before that, I was working in two financial institutions, initially at OCBC, and then spending a large part of the first half of my finance career at Citibank, managing high net worth individuals' wealth, before taking some time off to do some studies, before then coming to join Endowus. My job as the client experience lead is to be, in some sense, the face of in front of a tech platform, right? So basically providing financial advisory, resolving client issue on the platform, and just giving people a good experience with Endowus, right? So that's essentially my role. Yeah.
Maddie,
Danny or
you want to
Maddie?
jump in?
Okay, well, I guess I will take the floor. Can you guys hear me? Is my audio
Yes.
okay? Okay, great. Yeah, hi everyone. I'm Maddie. Well, a lot of people know me as Madeline, but you can just call me Maddie. It's a lot easier. I joined Endowus quite recently, but prior to this, I was working for the government. I've been a teacher for a little bit. I've been doing policy work, and here I am, just helping you guys figure out how to use Endowus, helping you think through your investments. As part of the CX team. Why did I join Endowus? Well, investing is something that I am really interested in. I've been doing it for a long time. Well, for as long as my young life can be as long as. But basically, really believe in what Endowus does because it's trying to bring institutional investing, opening it up to retail investors, which is really to me a very worthwhile mission. Maybe Danny would like to tell us about himself now.
Yeah. So hi guys, thanks for joining us today. I'm Danny. Similar to Maddie, I'm a client experience analyst at Endowus. And like Linsing and Maddie have shared, what we do on a day-to-day basis will be advisory services, helping clients really smoothen their client experience on the platform. And also, we do have other projects that we work on. For example, Maddie works a lot on the FAQ page with our colleague Joyce. I'm working on a WhatsApp platform that we can launch to investors because that's a feedback that we've always gotten. So it's not just just mundane tasks. We do focus a lot on making sure the client experience is smooth. And again, why I joined Endowus was, just a little bit more about what I was doing before Endowus. I actually just graduated from uni July 2020. So I came back to Singapore and I started work. The reason why I decided to join Endowus is I think it's fair to say that all the Endowus staff are very missional about what we do. And we really do think that we are helping to solve a big problem in Singapore, which is investing and financial literacy. Yeah, back to Lindsay.
Yeah, no, thank you for that. I realized that I didn't stick to the script. I didn't share why I joined Endowus, right? And I think Danny alluded to it. I had an opportunity to go back to jobs that I was holding. But I firmly believe in the vision and the mission of truly making a difference in people's lives by providing great access to products, right? The best access to products. Providing great advisory that is conflict free, right? If it's the first time you're hearing from us, we do not take any kickback to commissions from product providers. You might not think it's a big deal, but in the industry in finance, it's a $1 million industry, and these kickbacks or these retrocession fees or trailer fees are a huge part of the incentive programs for advisors. But for us, we are values and missions based, and we want to ensure that our advice to you is conflict free. And I firmly believe in it. When the founders had a conversation with me, I resonated with it because I feel that is needed in the industry. And that's the reason why I enjoy Endowus. And that mission and vision, as I mentioned earlier, hasn't changed. And I also know that Maddie and Danny, as well as a shout out to Joyce and Hyoki, two of our other colleagues who you might interacted with, together, obviously with our boss and thing, we should mention her. We are a mission and very clear of what we're trying to do. We're not perfect by any means.
It seems like someone wants to know whether we can call you Lini.
Lini.
I mean, I think that's okay. He probably doesn't mind.
Yes.
Yeah.
Yes. Thank you.
But
Yeah.
actually, I mean, I thought I wanted to just check, right? I mean, you guys both studied finance, and you have that kind of background, or well, at least in saying you worked in a financial firm before, and it's just something that I would like to know, which is, how did you guys get interested in investing and money management? For Danny, why did you choose to do that? And then for Lindsay, you came from something else and then went into finance. What really got you started into this field?
Yeah, maybe I'll jump in. So, well, I mean, personal finance has always been something I was very interested in since the start. And I remember it was a very specific anecdote of one day coming across the concept. I think it was in a lecture or something during uni where the concept of inflation popped up. Might have been a little bit before uni. But it was the thought that, money today isn't the same as money tomorrow. And if you, for example, have $1 million and you just stick it under your mattress and you come back in 30 years, the buying power is different, right? And the way I explain this to people for the first time would be 30 years ago when you buy chicken rice, which everyone on the CX team knows it's my favorite meal. So whenever you buy chicken rice, it used to be like, I don't know, $1, $2. And now like a plate of chicken rice will go between $3.50 to $4, right? So it's that buying power that has changed. And it's what really led me to become interested in investing would be the idea that the only way to beat inflation is to somehow put your money to work rather than just sticking it under the mattress. So that's basically how I began
I think if I
to
had $1
explore
million, I
investment.
wouldn't put it under the mattress in the first place. If I had $1 million,
Good point. Good point. Good point.
might put it into, I don't know, the market or a house or something. At least, my mattress would be too fat otherwise. Lindsay,
60
what
point.
about you?
Yeah, that was a great question. My interest began when actually I saw my dad trading shares via the television. I'm not sure how many of you are old enough to remember the days where you can actually see stock prices on the television,
Hey,
like
Lindsay,
just like a
don't play
Bloomberg
the age
ticker.
card here, okay? I know you're the older
No,
one.
no, no. But I mean, to that question, right? I do remember my dad scrolling, to the different tickers, to the different channels to actually see stock prices. But of course, I also remembered the days of the Asian financial crisis, where thankfully my family was relatively unscathed, but I know of people who were deeply impacted by the 97 crisis, not just economically, but also from a familiar basis, right? Family, from a familiar perspective. So that had left an indelible mark on my life. That money management and investing well is not just something that someone who's interested in should pursue, but everyone should actually take an active interest in it, because you like it or don't like it, it has impact on our day-to-day lives as well as impact on our family. So that's basically how I got to know about investing. How about you, Maddie? How about you?
Yeah, well, I mean, okay, you guys have such very very structured ways about it. I actually came to it because I really remember this one incident. I mean, I grew up in a very financially insecure environment, but one thing that really struck me was when I was studying abroad, and I didn't know I had to pay a deposit to rent an apartment. So it was like after my first year, I just finished in halls, and I had to go and rent an apartment, and I didn't save a deposit. And so here I am in summer break thinking, oh my gosh, where am I going to find £1,000 to put down as deposit? And it was a terrible time. You realize how much you need to plan ahead. You realize how much you need in order to just make your day-to-day life flow smoothly. And I think it really came from there for me personally. So I don't know, it's not as deep, hard hitting as watching my dad invest, or learning about it in uni. It was more like, oh gosh, what did I do? I'm in trouble now. So actually, I think we all came from different journeys into this, but we seem to share the same passion for making sure that other people don't make the same mistakes as us, or are able to learn the lessons that we have learned ourselves. So what I really want to know, Lindsay, is, being the most experienced person here, what is the one investment mistake that you have made?
I know Maddie has been dying to call me old in public for the longest time. Go ahead, it's okay. I forgive you, Maddie. I think the one investment mistake or financial planning mistake, however you want to call it, would to buy an investment linked insurance plan. I should have known better, even though I was in
Ooh, that's a
finance.
classic one, classic
I
mistake,
Yeah, yeah,
Lindsay.
and you'll be surprised someone approached me on the street and said, "What you like?" And I'll just hear it out, and I got lured into a rabbit hole. All right,
We all
so
know never to accept anything from the streets, okay? Definitely not from the street.
I mean, okay, one caveat here is, for those of us who are listening, these are all anecdotal sharings. Please obviously don't constitute this as financial advice, right? So reach out to us if you want proper financial advice. I've got to say yes to make sure that we are covered. But these are all our own experiences. So everyone's experiences are different, right? So do keep that in mind as you listen to our sharing. So the one investment mistake was buying an investment-linked insurance plan. And the reason why I said it's a mistake is because the way that this particular plan worked is there was huge upfront fees. I believe 90% of whatever I put in the first year went to administrative costs, and the remaining amounts were channeled into investment costs. So what that meant is that the first year it took a chunk of my premiums out of the way, and it's not invested. But obviously subsequent years the percentage of amount increased. But long story short, it's a mistake because after 10 years, I was probably out of the pocket about almost $10,000.
Oh my
Even
god.
though the market, even though the
$10,000.
market, even though the market, right? This was post 2008, right? So the market was sort of booming after the financial crisis. And just some context, I put about $3,000, three to four, maybe about $5,000 a year.
Oh, wow.
So I was down about 40%, but that's primarily because of the huge premium upfront,
Well,
right?
Danny, can you
So
imagine losing that kind of money? Especially, when we're just starting out in our
yeah,
careers. I mean, okay, sorry, Lindsay, again playing the age card here, but when you're starting out, you don't think about how much that $3,000 or $5,000 contribution would add up to. You don't realize, that actually over those years you're losing all that money to fees, and it really is something that I think at Endowus we're very mindful of, trying to keep the fees as low
absolutely.
as possible. What about you, Danny? Have you ever made any big mistakes?
Yeah, actually, before that, Lindsay, I was just curious, right? Hearing you share, was there anything in particular now looking back that you would consider a quote unquote a red flag or something that people should look out for? Would it be the fees or how would that? Yeah.
Yeah, I think the first thing that one should ask is how are the person who's giving you advice, how are they remunerated? Don't get me wrong, there's nothing with remuneration. We all get remunerated. It's part and parcel of working in a capitalistic economy. But it makes sense, especially for financial advice, to ask the person how are they being remunerated, and the product that is being put in front of you, right? How much of it is actually goes to fulfilling your goals, and how much of it is actually commission to the company or to the advisor. That's just my one simple advice.
That makes sense. Thanks for sharing. Okay, so about my story. So further from earlier, I learned all these concepts about a dollar today is not the same as a dollar tomorrow. I decided, okay, it's time to start investing. So I invested for a while and just getting my feet wet. And then I decided, okay, it's time to deploy more capital. And I did so January 2020.
Danny, did you
Um,
ever do stock picking when you were deploying your capital? That's what I
I
want to know.
didn't.
That's
I
what I want to know too.
I actually didn't. Because I knew about, okay, get a diversified portfolio, etc. But at that time, it was the mistake that I made was letting my emotions take control, right? So
Yeah,
January
yeah.
2020, invested a lump sum. The markets went down February, March, April, and I sold because I was like, okay, it's time to cut losses. And I was like, okay, I will try to sell at the bottom and then buy back in when it's, I will try to sell before it hits the bottom and then buy back in so that I can recoup my losses. It didn't work. A V-shaped recovery happened, and it was a painful experience. It was definitely a painful experience.
Just for everyone's sake, that happened before Danny joined the firm, right? So
yes. It
let's
happened.
put it out there. If he had joined the firm then, we would advise him against
Of
doing that.
course. Of course.
Thank you for that, Danny. How about Maddie? Maddie, what's your one investment
Oof.
mistake?
Yeah, I mean, I'm sure we've all made mistakes, but I think the thing about Danny's experience is something that a lot of people who want to market time they have to deal with. It's basically you have to time it twice, right? When is the peak that you exit, and then when is the moment at the bottom where you come in again? And if you don't time it right twice, there's no point. You're still gonna miss out, and you'll still be very upset with yourself, or you might end up sitting out of the market, waiting and waiting and waiting and never getting back in.
Absolutely.
I mean, and this what my mistake was, and it's not too different, which is why I asked about stock picking, right? Was that when I first started, obviously like everyone else thinking, oh yeah, I'll find the 10x out there. But having a day job, having things to do with your own life, you don't really have time to constantly do the due diligence and reading the prospectuses over and over again. So I actually bought one of the first trades that I ever made. I didn't even know what was going on. Put in a market order instead of limit order. Bought a very, very small lot of shares, and so my fees were insane. I think it was like $25 on that minimum, right? Because I didn't even hit the transaction number, and the company I invested in promptly went into decline, and now it's under judicial management. So obviously, didn't really do my homework.
So Manny, for the sake of the audience, can you just quickly share with us the difference between market order versus limit order?
It's like
very simple.
Yes.
Simple.
Okay. So I think the market order is like it will execute the price straight away, regardless of whatever the market price is at that moment. A limit order is a price that you would like to pay, and so if it hits that limit that you want, then the trade will be executed. So obviously, I went in at the time where I thought, oh, this company is going to do really well. No, bad idea, guys. Bad idea. I see we have a question here about what made me switch industries. Okay, so this is quite a personal question, and I mean, no offense to any people out there who choose a different path, but I think basically for me, I really wanted to push myself and experience all the different kinds of work environments. Being out here, working in a startup, working with people who really, really believe in what they do is something that is very, very different, from a conventional job, like where you're one person in a very big organization. And, on top of that, when I was thinking about how to move across from government to a wealth tech startup like Endowus, there was obviously the sense of stability, whether or not, this was a good idea. But I think, I haven't regretted my decision yet. Linsing, please don't make me regret my decision.
Oh my gosh. Manny,
calling him out.
Oh my God, we're going to have a separate conversation after this, right, Manny?
Yes.
No.
Yes,
Yeah.
I mean, but it's very difficult coming into an industry that's very, very different. And so it's something that as people who come into this industry, we do need to keep abreast of current topics in finance and market movements. And that was when I first started quite difficult to get a sense of it. Even though I love reading, I was always reading The Economist, and I actually subscribed to different financial newspapers. It's still hard to keep up. But thankfully, at Endowus, our investment office, the analysts are constantly open, discussing things with us, clarifying questions. And of course, when our clients give us questions which we cannot answer, right, straight away, investment office, let's go. Tell me, what does this mean? But what about you guys? How do you guys keep up with topics and trends in the markets, especially how it moves so quickly?
Yeah, I think personally, what we do, at least within the CX team, is I think all of us do keep an eye on broad market indices. We're always watching the news. So I think that's a great way to just, keep track of market movements. We actually have a daily huddle within the CX team where all of us will just share what's happening in the markets, so everybody's aware. But more specific to personal finance, I think Seedly does have very great updates. Shout out to Seedly, if I'm pointing at the right one. Yeah, shout out to Seedly. Personal finance, they'll tell you like which credit card is the best if you're looking for, I don't know, cashback or miles. So Seedly does a great job on that. But back to, for example, portfolio performance, like Maddie said, Sam, Yulin, and Kyungju and Wei Mei, they do a great job of keeping the team updated. Those are the members of the IO that help keep Endowus running. So they definitely give us great updates. How about you, Lindsay?
Yeah, so I actually read this blog by this individual called Ben Carson. It's called A Wealth of Common Sense. I think it's actually introduced to me by Greg, our CEO, and that's been quite helpful and informative. But I also keep abreast of issues with via CNBC and Market Watch. And I guess a habit of my old job is I like to monitor the US market. So that's just how I keep abreast of market situation. At this juncture, what I'm still going to do is for those of you who just joined us, just to encourage you to come on to our booth, leave your name and number. You get access to great advice. When you sign up, we will also furnish with you. As you sign up an account, we will also send you like updated material on what we think about the markets, as well as our portfolios through our financial blog called Endowus Insights. A fun fact is that Endowus actually started. We started our financial blog even before we started our service. And basically this DNA of trying to up the financial literacy rate in Singapore is really steeped into our DNA. And again, another fun fact is we actually got nominated for a financial blog award, even though we are not a financial blog. I'm not sure whether Maddie or Danny knew about that, but we were nominated for top financial blog in Singapore, I think the year before, even though we're not a financial blog, right? So that's testament to what we're trying to do.
And I think you're right. Like literacy is really something that we very, very much believe in. And we're quite lucky, I think, that we live in a day and age where the internet is available, where you can look for all this information and share great ideas across. Occasionally, I look at the Singapore FI subreddit out there just to see whether people have any good ideas for what to do or how they're actually talking and thinking about finance in Singapore. And I think ultimately we're all just here just trying to help each other get across our ideas, trying to get them started. And so I think before we forget about the rest of the people out there in the audience, maybe we could share like a personal finance tip that each of us have for the audience, and then we can take some questions from the floor if there's any.
Great. Yeah. I think maybe I'll go first, and then the rest can chime in. I think for me, the one tip is basically save more than you spend. That's simple, right? But you'll be surprised how many people struggle with that.
Such deep, such deep.
And I will add to a spreadsheet all your expenses. So I had this habit when I was doing my masters to basically, because I had a limited budget, to basically spreadsheet all every single expense I've had, and the habit has stayed with me even till today. Yep. So that's my one tip.
Yeah, I think like what Lin Sing said, obviously save more than you spend. That's how you have money, right? But I think it really starts from knowing how much you spend. So like he said, a spreadsheet definitely helps. So this an old trick that my mom always told me, right? Everybody always says, oh, save more than you spend. But it really starts with knowing how much do you spend in the first place. So tracking everything definitely helps. Don't let it run your life, right? Obviously, you should still enjoy life, but it's good to know where your monies are going.
So Danny, how much money do you spend on chicken rice every month, since you know where all your money goes?
I spend way too much on chicken rice. I spend way too much on chicken rice. But known issue. I'm happy to continue spending on chicken rice. It brings me joy.
Shout out to the hawker centers out there.
Support.
Represent. Yes.
Dangerous. I cannot put up signs these days, right?
How about you, Maddie?
Yeah.
Well, okay. I think you guys have the very good advice, very like parent-centric advice. Make sure you save more than you spend. My advice is actually to live a little. I think a lot of us get very caught up when we first get started in planning our finances and optimizing, and we forget that actually life is the day-to-day. You're actually living through it, and that does involve spending money on things that you like, experiences, hobbies, people. That involves spending some money, and that's okay. You still need to live life a little bit. So yeah, I'm a bit more fun, I think, compared to the two of you guys.
No, I think that's great advice. I think living a little, actually, the irony of it actually helps you to become a bit more disciplined, right? It's just like it's life, right? Saving is a means to an end, but obviously we just got to do what's necessary and get on with life. And as long as everything is within perimeters and within your budget, I think that's absolutely great advice. I think we've come to the point where I think the three of us have talked enough, and we definitely wanted to take some questions from the floor. So please feel free to just put it on YouTube or on the, I'm not sure whether you guys can put it on, yeah, just put it on YouTube, and we can see whether we can help you with that.
Yeah, for those that are tuning in on Seedly, they can also pop it in the chat, and then we'll be able to help respond as well.
Yeah. So till we get questions,
Okay, maybe I'll just ask a question since we're waiting for questions. Lin Sing, what is your portfolio looking like? I think people would
actually, my
love
friend
to
just
know.
asked me the other day. You talking about my returns, or you talking about my?
Oh no, what do you
exact
consider
portfolio?
when you want to allocate your portfolio?
Yeah, I think for me, it's, much as it's very cliche, I do consider the goals that I'd like to achieve. For me, it's okay. I don't have kids yet, but I'm planning to have kids. So I have pre-planned to have a goal for. I mean, I want to have 3 kids, so I sort of have a goal for 3 kids, sort of, but they are not born yet.
Lin
Don't know
Sing, you
whether I
already
ever
have
have them.
4. You've got Danny, Joyce, me, and Yuki, right? We're your children.
4 kids, bro. 4 kids.
I'm not sure about that. I mean, I need to rethink parenthood if you guys are my kids. No, I love you guys very much. But anyway, these three goals. And it's the same advice that I mean, I take my own advice to clients is the 3 goals. And depending on my horizon, about 20 years. So I'm looking at a 80-20 portfolio. And I don't try to be too smart, right? I know I'm not the brightest guy in the room, so I just stick to what Sam and the investment office tells me to do, which is the 80-20 that's suitable for my risk appetite. Yeah, so those are my three portfolios, with some overweights here and there, but yeah, pretty much that. Yeah. How about you? Anyone else want to chime in?
Maddie,
on what?
Go ahead.
Like I said, guys, I've learned my lesson. Stop picking. I don't do that anymore. No individual companies for me. Definitely broad market exposure using low cost funds. I do have some of my money in Endowus. Whatever I can put in there, it does go in there, and it's in the portfolios. I do have fund smart portfolios. Not that I think anything less of our core portfolios. They're great. But yeah, so I have some fun money as well that I've put in certain tilts, as Lin Sing has said. I think a lot of our clients, they themselves also have a little bit of like their own personal belief. We can't quite pretend that we don't feel like we have an opinion about the stock market. So it's
Absolutely.
okay, it's okay to have that. But the bulk of it, I think, you put it in the evidence-based investing, which is you want your broad market exposure, diversify away the risks with lots and lots of holdings, and control the costs. Yeah, so that's me for now. Maybe I will change later on. But Danny, what about you?
Yeah. So again, similar to what you guys have said, goal-based investing, we're big proponents of it. So personally, I have a couple of goals spread across all my different real life goals like housing, kids' education in the future, maybe even retirement. It's a bit early to think about, but better early than late. And also there is a split currently in my portfolio between our core allocation and our ESG. So for those that are not familiar, Endowus recently launched the first multi-asset class ESG portfolio. And so I do have an allocation to that. And a common question that we actually get from clients is how much should we allocate, between the core, between ESG, what's the difference? So obviously, Sam and Yulin have done webinars on this, and it's a very, very discussed point. Personally, for myself, I'm about 70% into our core portfolio and 30% into ESG. Yeah, currently it's looking
we have a
good.
question here. What percentage of your investments are with Endowus? Are you willing to share?
Yeah, for sure. So a core percentage of most of my investments are with Endowus. I would say about 50% is with Endowus. The rest are obviously tied in equities in the company as well. So that's great for all of us. And the rest of it is just sitting in my bank account, just safety net, 12-month funds. But I think, and you guys feel free to chime in, but I think with Endowus, it really is a total wealth platform. I can access shorter term liquidity, cash management. I can handle my longer term investments. I can access globally diversified portfolios at low cost. So a lot of my money is tied up with Endowus. Yes. How about you guys?
Maddie, go ahead.
Well, for me, I mean, before Endowus came on the scene, I was trying my best to make do with basically what was available out there. So whatever existing holdings I have with other platforms, they're still there. In fact, that mistake that I made when I first started trading, right, that company, I still hold those shares just to remind myself every time I log into my bank app of this mistake that I make. Currently, it's worth $21, but I'm pretty sure that's more of a lesson that I've learned. I think a large part of my spending now is actually into my own personal human capital. When you're, I think, just starting out in your career, you do spend a lot of money educating yourself, basically growing your own skill set. Because when you're younger, you have more human capital generally. No offense to Lin Sing, but basically you have more human capital, and then over time that translates into income, and then income is invested, and then you start having more money coming in from your investments. So, I basically put whatever extra I have right now. In fact, all my entire OA savings is with Endowus. So, 100%. And then, there's also all of that belief in the system. I don't even want to put money in property.
I think Manny brought up a really good point on investing yourself in human capital, and let me explain why. I think there are a lot of people very fixated on making the marginal return, not marginal return, to make a return off the stock market, and they channel a lot of their time and effort into doing that. But in some sense, we are professionals, if professional advisors, and I can share with you that actually it's extremely difficult to constantly monitor the market and to actually, in some sense, beat the market. So a lot of time, a lot of people spend the bulk of the time doing that. It's in my opinion, and I think there are statistics that bear out to that. Actually, what Maddie has actually done, like channeling that time that you actually fixated over making the incremental return on a particular stock, your return on investment could actually be better spent if you invest in yourself, upskill, learn a skill, learn how to code, take a diploma, take another degree, do a professional certification. Actually, that return on investment in the long term, that might actually yield you better returns than if you fixate over whether okay, no disrespect to Caddy Wood who spoke today, but or to invest, whether you should invest in ARK Invest or not, right? If you really just take an objective step back and calculate the amount of time you spend fixating over that, and then using that to actually invest in yourself, human capital, as Maddie pointed out, I would say statistically you are positioning yourself for greater ROI, right? On that note, I'll leave that as that. But for me, almost about 80% of my cash is invested in Endowus. The remaining 20% is just emergency needs. I'm in some sense utilitarian, so I want to make sure that every dollar is utilized properly, right? So I only have about 20% for emergency purposes. The rest of it is invested for long term goals. In lieu of the fact that we don't have many other questions, maybe we could do a fun segment with, and we didn't plan this, right? So for those who are here, about 23 of us watching, maybe you could just do, I mean, just gonna top of my head, right, with Maddie and Danny. Maybe start with an easy one, right? I'll ask you a few questions and then you just chime in. But what was shocking about you when you first, what was one thing that shocked you when you joined Endowus, right? Right, maybe, hopefully it's not too shocking, but okay, what is one thing that shocked you when you joined Endowus? Or unexpected?
Danny, you should go first.
Okay, sure. Let me hop in. Not to toot our own horn, but something that really shocked me when I joined Endowus was the culture within the firm. A lot of this will not be super obvious to investors looking in or clients using our platform, but I think it's safe to say that since I've joined, the culture within the firm is very vibrant, and with a very, very short feedback loop. If we ever make any mistakes, it's pretty straightforward where we go to. If we ever need help, our supervisors are always available, Lin Sing and Sin Ting, mostly. Shout out to you guys, Sin Ting. Yeah, so I would say that that's the thing that I have appreciated the most, the culture of the firm. How about you, Maddie, since you joined slightly more recently?
I think for me, it's again, thinking back to my other work experience, joining Endowus, one was shocking for me was one, transparency. we're always making sure that whatever information that we have, we will share it, whether it is between teammates or, even with our clients. If they have a question, we're not going to palm them off. We're actually going to try and take time to solve their question, to help them understand what's going on. So to me, that was a really big one. Maybe not shocking per se, but very endearing for me. And also the lack of hierarchy, right? The fact that I can tease my team lead about his age, and basically whenever I have any issues, I can just approach anyone in the firm. It was really, really refreshing. Of course, after this, Lindsay's probably gonna have a private chat with me about all this age-related remarks. But guys, just a joke, okay? I really love old people.
Oh my god. Oh my god. How about you, Lindsay? How about you?
Shocking. I think the fact that I think what was shocking that I think the partners would have hired me. To be honest,
Wait, you're shocked that they hired you?
I think so.
Lindsay, you
Okay,
must
I
have
think
some
so.
confidence. You're a wonderful
No.
person.
I mean, you guys have been around. You guys know that the quality of the people, not just qualifications and work experience, but the integrity, right? So I hold the partners in high regard, and not just saying because it's a live forum and we're tooting our own horn, but yeah, I was kind of shocked because it's high quality team, and the team that I see right now, I always joke like with Sinting that like if I were to apply for a job right now, I might not even get it because there's Danny and Maddie and Hyoki and Joyce in the running. I might not even get a job. But the quality, I was shocked by the quality of the people, right? Not just qualifications, but the integrity that is shown. And hopefully, we continue to hire similarly people with high integrity. And that's really, yeah, what I'm shocked about. Yeah.
I think you're absolutely right that the mix of people is very, very crucial. And I think when it comes to managing your money, and our clients would definitely be on the lookout to make sure that the people who handle their money are people that they trust and who will give them what they are looking for, who don't hide anything from them, are open and understanding, and basically there to listen to what they are thinking about, what their concerns are. And that's really something that I hope that we are able to show our clients, because it's really hard to convince people, especially when you're a startup at first, right? When they're thinking, I'm going to put my life savings with you. We totally understand the concern. We totally understand the fear. And when you read about the recent news, I don't know if you guys were following the crypto trading platform Talk. Yeah, it really does put fear in your hearts. But I think, I hope that we are able to, as we talk to you guys over email, over calls, in person as well, but able to show you that, yeah, we're here, we're real. I'm not a robot. There's no battery operation here. So...
Are you sure?
Ooh.
No. Thank you for that, and hopefully Maddie and Danny, you guys just joined us about less than a year. Hopefully that the ethos is coming true, and cascading from the partners as well from the wider team. We've got about 15 minutes left, and please feel free to, this is the audience, please feel free to ask us any questions. We as much as possible, we want to be transparent, and we want to get to know you as well. Maybe a fun thing is, what are some of the common client queries that you guys receive? Would you guys want to share, like, what are some of the common queries that you get?
I think the one that we get a lot from people from all walks of life, right? And I'm sure people who are watching this right now will also identify is, do I lump sum invest, or do I dollar cost average? Okay, this is like, I think we get this question every day, almost every call someone will ask, especially now when they look at the prices and they hear people talking about a bubble coming, and they're like, should I wait? Is it better if I just hold off? Because if not, I'm being gypped. I have this huge price that I really don't want to pay for. What if tomorrow the market crashes, right? So what do you guys think of this? What's your opinion on the DCA versus lump sum?
Yeah, I think
my first. Sorry, go ahead, Danny. Go ahead.
Yeah, so I think it really depends. It really depends on your personal investment behavior. And I say that because statistically, academically speaking, lump sum investing over a long period of time has done better than dollar cost averaging into the markets, assuming it's a identical investment amount. The reason is obviously because you are able to stay invested for a longer period of time with a larger sum of money. But that will only hold true if you are able to stay invested through the entire period. And looking back, it's very easy to say, wow, 2000 in the year 2000, I got $1 million. I just put in, then I just wait, right? Like it's very
Danny,
easy
where are
to
you
say.
getting all this $1 million from?
I know.
Every time it's
I-
always $1 million.
No.
I
One,
know.
I'm working towards it. 1M65. But yeah, so if you have $1 million and just put it in the year 2000, it's easy to say, yeah, I can just hands free and wait until now and I would have X amount of dollars, right? But it's very hard to go through that if you are a very nervous investor, right? During periods of market volatility, if you know that you can't sleep at night, you break out in cold sweat because your portfolio is down 20%, 30%, even 50%, then lump sum investing might not be the most suited for you, which is why it might be more advisable to dollar cost into the markets. You buy at the highs, you buy at the lows, you just stay disciplined. Yeah. What are your thoughts, Lindsay?
Lindsay, have you ever had to deal with what Danny is talking about, where basically you're invested and then you see this huge drop afterwards, and your feelings in that moment?
Yeah, for sure. Personally, for sure. I bought. I mean, I can share with you during the financial crisis. I bought Bank of America, and obviously we saw the price tumble. So I understand those fears. I mean, those fears was were also felt because I used to work for Citibank, and then Citibank was less than $1. So while I didn't invest in Citibank, but the fact that my bank was at as well as clients' money, right? So and clients' investments and so on and so forth. So so definitely. So I completely agree with Danny. We actually have an article. I think it was Greg who wrote about it, about the difference between lump sum as well as dollar cost average. I would commend the article to you. It can be found on our financial blog, endowus.com/insights. Do check it out, right? There's huge amount of articles there. But yeah, how about you, Maddie?
I mean, I think for some of us who were invested during March last year, that was a very scary moment where, with the lockdowns happening, you weren't really sure what was it's the first time ever that vast parts of the world were shutting down, offices closed, no regular life. You didn't even know whether this was a normal crash, recession approach, or was it like the end of the world, right? But before I go into my story, I think we have a question from Edwin on YouTube about whether there are any upcoming products after ESG product launch. So we did recently launch our ESG portfolios, which are currently available for cash investments, hopefully on the other platforms SRS soon. But we are also launching a new cash management product next week. And I think that would be our cash management product called Cash Smart Ultra. So Cash Smart Ultra will be launched. Our Chief Investment Officer, Sam, will actually be doing a webinar with Yulin, our investment lead, and they will be talking through what exactly is Cash Smart Ultra, why is it different to the other ones, who should think about using it. So definitely sign up for our webinar next week, and you'll find out more about this product and how to get it in your portfolio. So back to the question on feeling lost and not sure whether you should withdraw. I think a lot of people do get through that point in time with their investments. If they see the drop, I mean, I saw the drop in price basically in 2020 March. The price for the, say, S&P 500 was pretty much the price that I paid 4 or 5 years ago. So all the gains up until that point in time were just wiped out, in a month. And thankfully, I didn't withdraw. I was just like, okay, close my eyes, go to work, don't think about anything, just live my day-to-day life and hug my loved ones, right? Don't look at the market, just believe that over time we will make it through this. And yeah, who would have guessed it would? It's look at the results today. Of course, yeah, maybe by Monday everything will be a different story again. But none of us could have predicted that by a year's time, the market would have reached all-time highs, recovered close to 50%, is it, Danny?
Yeah, about
Yeah. So
Yeah.
I think that's a great point that Maddie brought out. And I think what we do as advisors is we just want to ensure that you are in the risk appropriate portfolio, such that when there is volatility, you expect that and you are able to sleep well at night. This is not to say that your values of your underlying investments will not drop, but you are aware that it comes with investing. And we are very upfront with it, right? All the advisors have been drilled by myself or something to be upfront that your risk, you have to highlight the risk to the client, right? If it's not suitable, it's not suitable. It's fine. There is no issue with that, right? So I think we have a couple more questions. Let me just take some of them. Questions on future expansion plans. For sure, we are looking at expansion plans.
Definitely going to take over the world. That's the main plan.
Yeah, but I was more going to say is we are very focused in Singapore and serving our Singapore clients well. As you might have heard, we recently got Series A funding, and we are looking to build and entrench ourselves to better serve Singaporeans, right? So it's not like, oh, we got all these that we are looking to. Yes, we want to dominate the world, but we also have a fiduciary duty to serve our Singapore. I mean, I'm Singapore, and Danny and Maddie are Singaporeans, right? And serve Singaporeans well. Better products via CPF, right? We are still the only digital advisor that allows you to invest in CPF, right? So that is something that, in addition to the expansion plans, is something that we are very, very focused on.
I think more importantly, Lin Sing, is that as long as you're a client with us, we have a duty to you, regardless of where you come from, where you're based, what your goals are. We will serve you as best as we can. We will advise you as best as we can based on your personal circumstances. It doesn't matter whether you're in Thailand or Malaysia or Hong Kong or whatever, or Singapore. Whoever you are, if you want to invest through us, we're always going to be here to help you through it.
Absolutely. Well, just to caveat is currently we are only licensed in Singapore, so just a huge caveat there. So what is another question that is for what is CashMart interest? Well, I would not want to steal Sam and Yulin's thunder. So please join us on the webinar on Wednesday, and more details will be reviewed on that day. It's going to be really exciting. Yeah. So please do join us for the Wednesday webinar. Is there any other questions that we might have? Like it's coming about to 1:15. We've got about 7 more minutes. I don't want to take too much more time. So do highlight to us if there are more questions. How about Maddie or Danny? Any other questions you want to ask me, as a team, or whatever it is? Anything at all?
I think maybe one good question that we could talk some people through is basically, what exactly does cash management mean? I think a lot of our clients, they look at that and they just see it as like, oh, okay, I'm scared of putting my money in the stock market, so I'm going to put it in cash management, even if they have like a 15-year investing horizon. So actually cash management, I think, may be something that we could just expand a little bit on, especially leading up to our CashSmart Ultra launch.
Then you want to give it a go?
Yeah. So cash management, and sorry, just to jump in here, just to confirm, the webinar is actually on Thursday. So it's Thursday.
My bad.
All good. Just making sure everybody's on the same page. Thursday, 15th April, 7 p.m. Singapore time. Tune in. It's going to be awesome. CashSmart Ultra launch. Okay, sorry, Maddie, the question was, what exactly is cash management? Was it?
Yeah, I think the concept of cash management.
Yeah, so cash management is basically, it's used to manage your shorter term liquidity, right? So for example, again, using my $1 million example, if you have $1 million that you put in your bank
where is
account,
this $1 million coming from, Danny?
Just to say, guys, we're not actually paid $1 million.
Yeah, exactly.
I don't know where Danny's coming up with this.
Yeah, it's definitely
$1 million monopoly money.
We are not commission based, right? So just
we're
me and
not,
Maddie are not.
no,
Don't shout about Danny.
But yeah, so again, let's say you have $1 million, it's in your bank account. The interest rate that you're earning would be low, right? I think that one we can pretty much agree on. Currently, if I leave my money in my bank account, I'm getting maybe like 0.1, 0.05%, which is not fantastic, right? So the concept of cash management is to deploy that money into a low volatility investment to earn a slightly higher expected return, right? So currently we have CashSmart Enhanced and CashSmart Core. Now, CashSmart Core's current projected yields are between 0.8% to 0.9% per annum. And this is very well suited for money needs that you need within the month, right? So for example, if I think I'm going to need a bunch of money in May, CashSmart Core will be where I allocate it to. For money needs within the year, we can look towards CashSmart Enhanced, which because you have a longer investment horizon, you can undertake slightly higher risk to get that slightly higher return between 1.2% to 1.4% per annum. That's our projected yield again. So in a nutshell, that's basically our cash management offerings. Anything to add, Lindsay?
No, I think that's a great summary. Great question from Maddie. We've got about 4 more minutes. So folks, last opportunity to ask us anything. You might not see us till, well, you can always reach out to us through by signing up on our booth, right? You can reach out to us. We'll be in contact with you. We'll love to hear from you.
Yeah, if any of you are in the festival right now, if you leave your interested email, you'll be basically getting all our any kind of our discount promos, access fee credits kind of offers. So definitely leave your emails behind. If you want to speak to us and talk through some of your investment ideas or concerns, you can always reach out to us as well. We do have the Experience Endowus sessions that we regularly hold for people who want to know how the platform works, how to use it best for themselves. All of the information can be found on our booth, as well as from our website. If you are not in the CV Personal Finance Festival right now, you can find this information on our website. Otherwise, if you are in the festival, please reach out to us using the interested link, or give us a little chat, and we will return our or any of your questions.
Great. There's one last question on cash management returns, right? So I don't want to steal Sam and Yulin's thunder, and they'll probably be the best people to ask that question, and I'm sure they will address that question on Thursday. So my encouragement is do sign up for it. Get your families in, get your friends in, to just really understand, hear more from the experts on the cash management solution that we have, and so on. And so forth, right? So please, as Maddie says, sign up for an experience with us. Come and hear us talk. It'll be us again. Hopefully you're not too sick of us and our banter, but we really love to get to know you and to know you as people and see how we can partner you to achieve your financial goals. We're currently about 2 more minutes before 1:15, so I'm just going to do a quick roundup. Maddie, Danny, any last thoughts or advice for our audience?
I think for me personally, it's that if you are thinking of getting started, but you're scared, reach out to us, talk through some of your concerns. And at the end of the day, time in the market beats timing the market. So the sooner you get started, the more your future self is probably going to thank you for it. That's what I think about my past self. So.
Yeah. Like Maddie said, I think it's always a good time to get started. And if you guys have any questions, again, just reach out to us on our CV page. You'll be able to see our Experience Endowus link. You'll be able to reach out to us via our email support, and we'll be able to help.
Great. I think for me, the last thing is get in touch with us. Put your name down, put your email down, either at the booth or come and at the YouTube link. There are opportunities to connect with us. We would love to hear from you, get to know you, and see how best we can partner you. And I think with that, we are coming up to 1:15. We would like, on behalf of the team, on behalf of the wider Endowus team, we thank you for spending time with us. We wish you the very best, and we hope you enjoy the rest of the conference.
Should definitely stick around for Robo Wars.
Exactly, that was what I was going to say. At 4:15, right? Is that correct? 4:15.
Yes, for I think it's 4. If I'm not wrong, yeah.
4:15.
Stick around. Yeah.
Yeah. Is it 3:45? Is it 3:45? Sorry. But yes, there is a Robo was. Do stick around for that. And with that, we thank you for your time. This
Sorry,
is us.
just
Sorry, go ahead.
jumping in. The prelude to the Robo War starts at 3:45, and then the Robo Wars itself starts at 4:20. So do stay tuned, guys.
Okay, 3:45. Yeah, to come in, join us 3:45, and do enjoy the session with us. And with that, we signed off on behalf of the Endowus team. We thank you and we wish you a great afternoon ahead. Thank you and have a good afternoon.
Thanks, guys.
Thank you.
Thanks.